Now, before we move on to the sector spotlight, I want to tell you about an exclusive, once-in-a-lifetime trading event on the floor of the New York Stock Exchange tomorrow starting at 6 p.m. It will be an amazing opportunity. You get to work with these two guys, to network with seasoned traders in the Options Profits and T3 Live teams. Visit T3Live.com right now to sign up. There are only a few tickets left, so you have to act now. And now joining us as special guest is the Street's Skip Raschke. Skip is a member of the Street's Options Profit team and former options trader. Skip, it's so great to have you here.
Wonderful to be here.
Skip, thanks for coming on set, coming on board in the morning call.
Scott. My pleasure.
And both of these guys will be presenting at tomorrow's event, but right now Skip is here to tell us how to use options and help you trade the sector spotlight, which today is going to be retail. Guys, I want to start with the RTH because it did really well on Tuesday. We had retail sales for May, not as bad as people thought, which was kind of the idea. But is this really a rally you can believe in? So, Scott, I'm going to throw it to you first. Would you be looking to short Tuesday's bounce?
I don't think we short Tuesday's bounce yet. What I saw is a bounce off the 200-day, which typically happens. If you look here on the chart, it looks very similar to the S&Ps, where this one actually made it to the 200-day. You had a bounce up. We now have a clear defined support at the gap. If we can go sideways here, I think you could actually be a buyer through 106 to probably take us up to a bigger resistance around 107.80 or 108 in this indice.
And then what about for an options play, Skip? Because there are so many fundamental headwinds, $4 gasoline, high unemployment, all the like.
I prefer in this ETF trade to buy the at-the-money calls one time, sell the out-of-the-money calls twice. You're playing for a range move. The sale of the out-of-the-monies pays pretty much for the buy of the at-the-money. So in this case, you'd be buying the 105s once, selling the 110s twice, capturing that move from 105 to 110 with that play, and being short the 110s 2 times. That captures or cuts down the cost of the premium of the 105 buys.
Now let's go to JCPenney because I wanted to get you both of your takes on this stock in particular because it had a crazy move yesterday after they stole the retail executive from Apple, right? So, Scott, same kind of thing. 17% seems so overdone for the headline news that we saw. What would be your strategy for today?
Well, JCPenney's was very shorted, ever since the breakdown failure after earnings. So that news that the Apple executive was coming to be the CEO was really a short squeeze and very emotional. So look at the size of this bar from 30 to 35, 63, 36, right at the old resistance, right into the moving average. So I would want to see if it could hold up here to see if there's another trade. I would avoid it right now to see what type of commitment happens to see if there's another move there.
If long, you want to capture that gain. You do not want to let that gain get away. You can do that by either buying a put spread or buying a put straight out, selling a deeper in-the-money call. But capture that gain. Don't let that get away. That's a news event. It almost looks like a takeover situation given that bar. And it's possible. I mean, there has been talk somewhere along the line a few months ago that JCPenney could be acquired. But
who has the money to do that?
No. Well, at this point, they have the new CEO, so it probably won't happen. Right. It's actually these type of moves are very dangerous. I had traders on my floor yesterday that said, "Oh, this shouldn't be up $3. This shouldn't be up $4." They were shorting that entire move because they thought it was over dramatic, and they got very hurt here. So what you're trying to say is, you sell the excitement because as a professional, you do not buy it.
You have to capture that gain. You just have to do it.
I agree.
All right, let's go to Best Buy that actually didn't have any sort of crazy spike like that, but had some really good fundamentals, delivered killer earnings, rallied about 4.5%, but then hit some resistance on that 100-day, right, Scott?
Yes, this one has been a laggard. This one has been below all the moving averages. If you take a step back and see where this is in the chart, all the way to the bottom side. So it gapped up, didn't close on the highs on that good news. So I, again, would like to see this prove itself. I would say you could probably be a buyer if it were to clear this 131.50 area. But until then, I think it's just, in a void still, even with that news.
All right, so a void still. What about you, Skip?
Well, I like it fundamentally. I like what I saw yesterday. A little better earnings than was expected by the street, and that's always good. It is coming off a pretty good sell-off that it went through over the last few months. But fundamentally, it still has, I think, room for mid-30s. So I would be a buyer of the 28-33 spread, and I'd like to go out to January, capture the Christmas sales period and so forth, and if they live up to the earnings expectations, why shouldn't it trade at 35? It's a fine spread for around $2.
So you're trading it as a value play longer
Yes, I
term,
would.
and in that mid-30s
would.
area is the 200-day. So why not bounce to the to that 200-day? I like that play as well, but you have to put it in the drawer. It's not going to be much momentum there.
Right, precisely.
All right, let's go to Lululemon. I wanted to hit on this one, guys, because it's been such a loved stock in this sector. You know, had great numbers, got a lot of upgrades here. Well, I want to get your trade on what to do with the stock.
Lulu's been a momentum play, a great vehicle for my traders. They announced that 2-for-1 stock split. Technically, it's above the moving averages. It still looks good for higher prices when this market gets its footing. If you look right here, this was the gap up on that news. It's consolidating, showing commitment above that gap up. I think you could play this long as a trade through 91.60 to 92 for the descending channel, the macro descending channel back to 95. So I think if we continue to bounce here in the markets, we could see 95, and then that'll be a wall of resistance moving forward.
Real quick before you get to the options play, is there a way that you trade the stock split then?
Typically, it's all different. Do they run it into the stock split? Do they keep it below the pivot price beforehand? So it's not always the same. Sometimes they run it into the stock split, buy the rumor, then when it splits, they sell the news. It's different in every case.
All right, let me throw it over to you, Scott. Skip. Sorry, Skip Scott. It's confusing.
In general, when you get a 2-for-1 split, you're generally talking about a stock that is in a range well above, let's say, 50. So if you get a split in the 90s, 2-for-1, let's say it's 90 even. By the time the split happens, it's 45. Well, any stock trading at 90 is going to have a lower volatility in the options world than a $45 stock. So in this particular case, I would wait for the split and then buy the volatility.
All right, good trade. We have time for one more really fast. We got to go to Macy's.
You love Macy's.
I do, and you could also argue that the reason why JCPenney really stole that Apple executive was to compete with Macy's, because Macy's is just trumping JCPenney right now. Scott, let's look at the chart.
All right, if you look at Macy's, Macy's is one of the chosen ones where this was that disappointing outside day, but the market was weak. We're above all these moving averages, which is showing strength compared to a lot of the other ones testing their 200-day. I think this is in the game. It could be a good stock to go to when the market gets its footing. I will wait for it to start getting above this 28.50, and then this probably will be one of the first few retailers to make new highs once this market gets back on track.
Skip, round it out for us.
Makes sense to me. I would still wait a little bit, maybe fill a little bit more down on the downside, and then I would be probably vertically call spreading Macy's well into the end of the year, or even once again into January, because I like that January move and be positioned for that move.
So you think third, fourth quarter we're going to have an upside move? This is just a soft patch?
Exactly. That's the way I'd be playing retail.
Okay, sounds good.
All right, so if you like what you saw, you got some technical, you got some options, you have to join us on Thursday at the New York Stock Exchange, and there'll be drinks there in case you weren't sold. We'll be right back for your stock picks right after this.